What's going on, everybody? So there's been a lot of talk lately about the housing market and which direction it's headed in. So today I'm going to cover everything from interest rates and inflation all the way to our local market here in South Florida, so stay tuned. Okay, so before we dive into the local market, I'm going to start with inflation and interest rates. Now, I'm not going to get too deep into inflation, but the inflation rate is still rising, but not at the same pace as it was this time last year. CPI report came back November 10th, showing a lot less growth than what was expected. Now, inflation grew this month at 0.3% compared to 0.6% at the same time last year. So yes, prices are still high, but inflation is not rising at the same rate year over year. This report shows that things such as raising the interest rates is working in our favor. People are spending less money, they're holding onto their cash. This is really what's driving the interest rates, not the Fed. Inflation pushes rates, the Fed chases inflation, and then raises interest rates to try to slow it down. As soon as inflation starts to fall, we will see rates start to fall. So the information we have now does suggest that the peak may be in the rearview mirror unless something crazy or unexpected happens, but we don't know. Only time will tell. Now, as far as mortgage rates are concerned, the 30-year fix remains unchanged at about 7.1%, which is about a 6% increase from last month and more than double from this time last year when the rate was 2.86%, which is really just unhealthy for the market as we can see now. Like I said previously, unless something crazy happens, the information we just received would suggest that inflation is slowing and rates will eventually come down. But that's not a promise. We don't know when. Looking ahead, if you're a consumer and wondering whether you should buy or wait, well, that completely depends on your unique circumstance. If you're looking for something long-term and you can manage the monthly payment comfortably, then I would say go ahead and buy now, and you could always refinance when rates do come down. The only other two things that can come out of this is you can lock in a rate now and the interest rates just kind of stay where they're at, so then nothing really changes. Or you can lock in a rate and they keep increasing, in that case, that means you locked in at a good time. Now, if you're a homeowner thinking about selling, these rates affect you too, whether you have to buy a home or not. A higher rate means less buyers in the market, which means you need to be pinpoint accurate when pricing your home. The days of selling a home in 2 hours for 20% over asking price are long gone. Which brings me to our next topic, which is days on market. Now, days on market, or the number of days a home is on the market before a seller goes under contract with a buyer, is one of the factors that we use to determine how much demand there is. The longer the home sits on the market, the less demand, and vice versa. Now, if you remember during the zoo last year, a home would barely sit on the market for a week or two unless it was ridiculously overpriced. So the average days on market right now in the Tri-County area is about 25 days. Now, if we're being honest, this is still relatively low compared to what's considered normal. Now, if we take a look back to this time last year, that number was 17. So it really hasn't changed a whole lot. It basically went from 2.5 weeks to 3.5 weeks. Also, if you remember, if you were in the market last year, a tactic a lot of agents were using to drive up demand was they would withhold all showings until the first open house. So naturally, a home would sit on the market for about a week before any showings were allowed. And then what would happen is on that first day of showings, there would be a line around the block with multiple offers, usually above asking price. And that brings us to the next factor that we use to determine demand, which is the list price to sales price ratio. So this is the percentage of the listing price that homes are actually selling for. For example, if a home was listed at $100,000 and it sold for $90,000, that means it has a 90% list to sales price ratio. If it was listed at $100,000 and it sold for $110,000, that means it has 110% list to sales price ratio. The closer that number is to 100, the higher demand in the market and the more buyers are willing to pay for property. Right now, that number is 97.2% compared to 100% this time last year. Now, disclaimer, my MLS doesn't account for anything over 100%, so that number is most likely higher, and it might not seem like a big difference, but it really is. So to put it into perspective, at 97.2%, a home listed at $500,000 on average means it's selling for about $486,000 right now compared to $500,000 last year minimum. most likely more. All right, transitioning into price, let's talk about what homes are selling for in South Florida these days. Now, the average sold price in South Florida is about $399,000 right now compared to $442,000 at this time last year. Now, during the spring months this year, homes peaked at an average sold price of $565,000, which is a huge difference compared to where we're at right now, 35% to be exact. But if you look at that number over a period of 4 or 5 years, it was 291,000, so it's still relatively higher. Now, another interesting stat to look at is the months of inventory, aka the supply of homes available. This number determines if we're in a buyer's market, a seller's market, or a balanced market. For clarification, a seller's market is anything less than 3 months, a buyer's market is anything above 6 months, and a balanced market is everything in between. Right now, we're sitting at about 2.8 months of inventory, which technically puts us in a seller's market. This time last year, we were at 2.2 months, so not a huge change. What this means is if we were to sell all the current homes that are listed, we would run out of inventory in about 2.8 months. Now, just because we're heading back to a normal seller's market does not mean sellers are in full control right now. Buyers have a lot more options these days, and given the decreased demand due to rising interest rates, a lot of sellers have been forced to reduce their price, which is giving buyers more control than they've been used to in these last few years. So what does this all mean? To break it down, we're finally seeing the market cool off after a hot 2 years and finally heading back to some normalcy. Interest rates may be high, but historically they're still right at about average, which is 8%. Will the market crash? Well, not as of right now. Should you buy a home or wait? Well, if you have a long-term plan and you can afford it, it depends on your unique circumstance. I say go for it. You can always refinance later. Should you sell your home now or wait? Well, like I've said in a previous video, if you're not going to just gamble with the market, then I say go for it. Prices are still high. Real estate always has a funny way of working out in the long run. Now that about wraps up my monthly update. If you want to know about any cities in particular, I'll leave my contact info below. Reach out to me at any time. And make sure you subscribe to my channel to stay up to date with the market and anything and everything you need to know about relocating to South Florida. Thank you to everyone for watching, and we'll see you on the next one.